Hello, everyone. Great to see you. Can you hear my voice and see my screen? Oh, bad joke. Sorry. This is a recording. All right, we're going to start with our disclaimer that trading involves risk of loss of all or part of your trading account or more. Always use discretionary funds when trading. Never trade any market with money you cannot afford to lose. I want to welcome everybody to the DMR for the 15th of November, 2016. We've been through several DMRs, far more than 6, dealing with this idea of trading the microcycles on the M1 chart. Over the past many weeks, we have covered the trading microcycles on the M1 chart. We've covered the high-low drill. I covered a session on this as well. Steve did a DMR session on the high-low drill. We covered position sizing and risk configurations. We covered inducement phases and multi-time frame stacked threes, a very important concept that we did at least 2 DMRs just on this concept. I believe we split this up. And then we moved on to a very important topic of narrowing down to focus pairs and fractional disparity. That was a very interesting session where we came to the conclusion that there were 7 very clear pairs for us to focus on and trade. And then we talked about using the other majors and other ideas like the US dollar and oil to give us a fractional view to heighten our situational awareness to trade those 7 pairs. So that was a very important session to get that material down. You don't want to be looking at M1 charts all across the board. You will drive yourself nuts. Right? Then we got into multi-time frame pre-shift confluences. We broke this session up into 2 parts. We talked about the multi-time frame pre-confluences, and as well, we then added in this idea of multi-time frame markups, which is extremely important leading into tonight's session. And with that in mind, I want to congratulate Mario for sending me not 1, not 2, not 3, not 4, not 5, but 6 markups. All right, Mario, all over this thing. I really appreciate that. That's absolutely awesome. All right, so Mario, great work with the multi-time frame markups. There are actually a few other students that have been sending these. This is vital material in order to deal with adding into a position, which is what we're going to talk about in this session. Why would one want to add into a position in the first place? Might be more headache. Why would I do that? Well, the idea hit, interestingly enough, in this Napoleon Hill concept, which was an email, and I noticed this writing here. They avoid unnecessary risks by implementing their decisions gradually. You implement your decision gradually when you're adding in. You're not putting all of your risk in one place. And each action is contingent upon the success of the one that preceded it. So as you add in, you're bringing your risk into play, but the market actually has to move into your favor before you begin to stack into your position. That's actually a neat idea. And this is a concept I've been personally working on for 8.5, I'm going to probably say 11 months. Probably about 10 months, 11 months. So it's humbling to share this with you all here. I wanted to make sure it was actually happening in the market enough that it was worth describing and worth doing the work that's going to take on your side to absorb this most interesting component to our trading of the microcycles, which is adding into a position using the M1 chart. Okay. Risk, right? Why would one add into a position in the first place? Why would you go through the trouble? Well, risk can be spread out. One can risk 1% at each area and add in without taking on more than 1% at any given time, yet still have a large position in there. With more lot size in the trade, one can drastically increase the gains on the trade for a given distance of motion. That's important if you want to get out of there to go back to sleep if you're getting up in the middle of the night to trade London and you are in the domestic United States. Okay, because as well, another reason one would want to add into a position, because more profit taken out of the market without adding additional risk, one can be done with their daily profit target oftentimes within a 2-hour window in the London session. You can be in and out, and in some cases 10% more profitable. All right, beautiful, it is. Okay, the price to pay for consistently nailing this technique, however, is homework, 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 and the evil one, experience. How on earth do we gain experience without sitting in front of the charts and going through it? We've talked about that a lot. Homework obviously is about these multi-time frame markups. So this concept I'm going to show to you, I want to impel you to create multi-time frame markups that deal with it if it is something you're interested in. Not everybody's going to want to trade this way. I understand. It takes tight engagement, focus, and it takes a lot of this back work. It will take a lot of work on your end. All right, so experience. What is the experience? How do we speed up experience? We talked about that last DMR. Playback of flashcard sequences. Notice I'm not saying making flashcard sequences. I'm not saying making multi-time frame markups. That doesn't give you any experience at all. What gives you experience is the playback of flashcard sequences. Ask yourself this one salient question honestly. Looking back over your Forex trading experience, what is the number one mistake you have made? What is the number one mistake you have made? I know I made this mistake. I know Steve made this mistake. I know probably everybody listening to this session knows this mistake. It's a very simple one. Prematurely going live with a trading concept. You don't know it deeply. You don't have the experience with it yet. Guess what? It's going to be difficult to execute clearly, right? Not understanding ahead of time how long the road actually is to seeing a trading concept for yourself where you don't question your executions. Remember, if you question your executions, a lot of times you're either going to be late or you're going to be wrong. You want to get to the point where it's automatic pilot, baby. You want to get to the point where you see something happen, you're able to take appropriate action with very little emotion, and you're able to execute. That takes a while to create. All right. You also might not understand the concept totally ahead of time, but hey, we've all been there, red light, green light, whatever it is you've done, you've put money in front of the idea of gaining experience. We've all made this mistake. All right. So in this session, we're going to learn the concept of adding in. We're going to then talk about multi-time frame markups. And then down the line, we'll get into flashcard sequences. And way down the road, you are going to live trade this concept. You are not going to jump in this prematurely. Please don't do it. All right. The idea of learning to add in, the idea of making multi-time frame markups to clearly show how this lays out so you get a sense of how they work out. And then, of course, you create the flashcard sequences. Then somewhere over this hill where the camera is not seeing, there's going to be a sign down there that says playback flashcard sequences. And then way on down the line, you get to going live. All right. The idea here is don't use this concept to revenge trade a drawn down account. Please don't do that. All right. There might be some people, 30%, 40%, 50%. I've drawn down my account. You're showing me a way I can make 10% in 2 hours, Jim. I'm going to push it. That's okay. I'm all right. No, don't do it. Please don't. Don't use this concept to revenge trade a drawn down account. Whatever you do. Remember, learning a concept is part of what you're doing here is validating it for yourself. I'll show you some charts. I'll show you a lot of material tonight that you will have to translate into being able to look at a blank chart and say, oh, I see it. I see what Jim is talking about. I see it here. I see it here. I see it here. Then you develop your markups on the multi-time frame. And then at some point, it becomes valuable to you that you endeavor to invest your time in creating flashcard sequences and then playing back the flashcard sequences. That's on down the road. And not until way down there, farther than I can throw a football, farther than you can throw a football, is the go live component of this particular trading concept of adding into a position. All right. All add-ins are ideally executed off clear London patterns, type 1, type 2, or type 3, in line with the H1 count. I hope I don't have to talk about that to any great depth here. This is the entirety of the method. None of this goes away. None of this goes away. You want to be in line with the H1 market maker cycle. You want to as well be executing a type 1, type 2, or type 3 London pattern. Don't try to do this technique of adding in various places of the market that don't resemble this. We'll talk about an intraday 50-50 balance that this can be executed in. Absolutely. In certain circumstances, you can do that. I'm going to show you an example of that. In fact, our friend here took a beautiful, this is Scott, took a beautiful AR50 bounce, right, at Asia range. It broke the Asia range, then pulled back to the Asia midline right off the Mayo, and he got 90 pips out of this thing on a 1 minute entry. But guess what there, Scott? You had 1, 2, 3, give it about 45 minutes plus. I'm going to show you how you might be able to be a little more productive with your time in here to basically milk this thing a tad further. All right, exciting concept. We're all excited about it. It's all based on the London pattern. It's based on the H1 market maker cycle. Don't kid yourself, right? Beat the Market Maker Essence cheat sheet is the thing you want to familiarize yourself with when discussing this. All right, before considering doing this, you should be able to put on an M1 microcycle trade either as a box pending trade. That's what Steve was talking about on a few of his DMRs for the past couple of sessions, or being able to put on an M13 Lime confirmation right at the fringe, right at the fringe. Let me show you examples here. We'll draw this out for you. Okay, you've got your Asia range. You have your 1, 2, 3 pushes up into a leg 1. Steve would have us do a box pending trade where you bring the box across, put the pending order 1 pip inside of that extreme, wait for it, and hope the market comes up and fills your short order down to the bottom, and now you're in a box pending trade. The other option here, of course, is for price to roll out of that area, and you have your 13 EMA on the M1 chart, which is colored a lime green, and it is a dotted line. You have that go above, below, above, and below on a valid M. That then becomes your entry. These are the 2 fringe entries that will anchor these add-in trades. Okay, that will be your entry either to the upside or to the downside. Okay, that needs to be super solid in your mind before you engage in adding in. So for many here, the objective will be to start perfecting these M1 microcycle fringe trades and looking for simple 3-to-1 to 5-to-1 reward risk trades. Okay, we have a ton of those posted in the forum. If you go to the DMR section of the forum, you go down to this area that is M1 microcycle gallery, pages after pages after pages after pages after pages of microcycle entries. Let's just randomly go find one, and I'll show you what we're talking about here. Here's one. This one looks rather logical. Okay, so that's obviously the 15-minute, and this would be the 1 minute. Here's your M at the high of day. Okay, so you can go through this thread, find your 1, 2, 3 up, near gap time, your microcycle back up, creating another M, and down she went. All right, there's a ton of these posted. All right, so I do implore you to go back into this section of the forum, M1 microcycle gallery, to get up to speed with getting your order in, at least at the confirmed entry, if not box pending order. Okay, and be happy with 3-to-1 or 5-to-1 risk reward trades. That's to the next trap area, or just on the other side of the next trap area. Once you get used to 3-to-1 to 5-to-1 trades, you're going to be great. But if you can bring these up to 7-to-1 to 10-to-1, that's the idea here. Okay, so don't rush past this stage. Don't rush past getting a order on at a confirmed microcycle M in the gap time box and hold that for 3 to 5-to-1. Right, 3-to-1 or 5-to-1 reward risk. That's 1 unit of risk for 3 to 5 units of gain. Pending or M1 confirm entries are the anchor position we use in adding in. Do not add in unless you have these things already placed in the market. All right, 2 types of add-ins. 1, zone flip breakout. Brand new concept of an idea we've talked about for quite some time. That is the zone flip. Now we're going to introduce a breakout. This is only for the M1 chart. It's only if you have an order near the fringe, and it's only if you see a clear London pattern type 1, 2, or 3. All right, price breaks below an area, you spot the zone flip. Price pulls back into that area, reverses off of it, then you're set up to add in. Okay, what we're going to do is we're going to take a breakout of this area, but we're not going to take just a literal breakout. We have to be smart about how we do this. And this is where the 11 months of study and development of this has come into play, all right? You're going to want to take this trap area across and add in a distance of the spread times half of that value. So 1.5 times the spread is going to be where you place your breakout order and where you place your stop above the zone flip. We want to create a buffer in here. We don't want to get taken into this and have them just pull right back. You want to make sure it's a definitive breakout, and in terms of the stop loss, you want to make sure it's a stop that actually throws the spread high enough to grab it. I'm going to illustrate this for you, okay? So if the spread on this particular pair is 1 pip, add half of the value, which is 0.5, gives you 1.5 pips. Measure 1.5 pips out in front of this trap area. That's where you're going to want to put your breakout pending short, zone flip breakout. All right, same thing goes for where you're going to place your stop loss. It's going to be 1 pips plus half, that'll be 1.5 above. I'm going to show you why that's extremely important, especially in shorts. Okay, so your stop loss is above and beyond that zone flip. Your breakout is above and beyond that trap area. Okay, very important concept here. Remember, if price reaches back up to that zone flip line, the spread will reach above that price. It captures a lot of people off guard, but when the price moves back up into that area and your stop loss is inside of that bid-ask area, you're going to get taken out. All right, any stops in here will be taken out. That's why early on in your trading career, you saw price run up to the high. You had your stop just above, and the broker took you out, and price went on. You sent them a letter. Why'd you take me out? Price never went up there. And he says to you, oh, the spread went up there. This is very important in adding in with these zone flip breakouts. Okay, any stops in this area will take you out, even though price has not reached that far above. Remember, that ask line reaches up there. This is why I prefer to always have the bid-ask Indy on my charts, as I want to see the ask line in real time. I want to see both of these in real time. And I like the bid-ask Indy because it places it right there on the side. It doesn't obscure all the information back to the left. Okay, ask line is the one that's on top, all right? So you want to get your stop loss outside of that in case it comes back just to that zone flip. You want to have your stop loss on the other side of it. Okay, hopefully you get a nice move that pulls back to that zone flip, holds that area, and then peels right into it. The whole entire idea of why I looked at this was asking myself the question, how do I get no drawdown entries on a majority of these London patterns? How do I get in on an add-in and it not pull back against me? That was the number one criterion looking at this. And this was the one style of entry that I found more times than not. Again, you're going to go back in the chart yourselves and you're going to answer the question for yourself. Many times it doesn't have a drawdown. It's a stiff M1 candle. It pops down 5 or 6 pips and it never comes back. You're instantly in profit a lot. Okay, so your first position, you had perhaps a unit of risk on this first position. The second position, you probably also had 1 unit of risk. If you're adding in progressively, you've got 2% in the market, guess what? You can pull that stop loss down to break even and take 1% of risk out of this thing. And now you're back to only 1% of risk, yet you have the equivalent of 2% in lot size in the market. So you can see you're adding in size without the commensurate risk involved. That means you obviously have to be smart about it. This has been amazing for the last 11 months. It's working over and over. So I do compel you to think about this and go back in the charts and answer the question for yourself, does this actually happen? Okay, so say for instance you get another zone flip, you get another area where it pulls back into a zone flip, starts to peel across. You can then project out your breakout and your stop loss with that buffer in mind. All right, price comes down, hits the low of this area, and because you've thought this thing out, your breakout isn't triggered. You're not going to get taken in and pulled back into the range. You're actually far enough outside in front of that trap area to allow for a definitive move to come through there and trigger your breakout order. Okay, so many times I've seen it happen a lot. It happened last night. It happened yesterday on Monday. I'm going to show you 3 examples at the end of this presentation where this stuff happens. All right, so beautiful break of the area. Your pending order now is hot. Now you have 3 positions on in the market. All right, ideally, we don't want to add in with zone flip breakouts after price has moved more than 25 pips off the high of day or low day. You want to do 3 orders at the most, sometimes just 2 at the extreme of the day. You don't want to be doing this stuff in the middle of the range. You don't want to be doing this on the way down into the end of the day on the far side, down into where price is eventually headed. You want to do this at the top portion of the range. 3 positions is ideal, as close to high day, low day as possible, not to be executed in the range. You don't want to be doing this in the range. And the general rule of thumb is that you want it to be about a quarter of the daily range. Sometimes a little less, sometimes a little more. It's going to depend on how the chart looks. But obviously you're going to want to translate this. A pair like Pound New Zealand is going to be a lot bigger than 25 pips as a quarter of the daily range. A pair like Euro Pound might be less than 25 pips as a quarter of the daily range. Once we're beyond this upper or lower quarter of the daily range, we will then move into the next type of add-in. Right? We're not going to deal with the zone flip breakout stuff. We're only doing the zone flip breakouts at the extreme, close to the extreme of price, and then as it progresses down into price, but certainly not beyond about a quarter of the daily range. This is where homework comes in. This is where you'll go do the work and you'll figure out that this is actually the way to do it. All right, so we're going to get into our next type of add-in, which usually plays out well after the M15 push 1 or M15 push 2 is achieved. So you're going to always expect in the Forex market a pullback into the middle of the area. It's typical in Forex you have pullback. So we want to allow this first move to happen, then we get the pullback, then we get into this second style of adding in, which guess what? A lot of you people are already doing it. There are a lot of our traders that are already trading this type of add-in, which is really exciting. All right, I'm not going to rush into it, but let's take these next stop losses. Since we now are engaged deeper into the market, we can bring our stop losses even further into price to basically have close to about a 1% risk at this time, maybe a little bit above, a little bit below. We're not going to get into that. I want to just allow you to absorb in this first session the details of this zone flip breakout. Okay, that's the crux of this. Remember, price in Forex always has a tendency to correct back into the range, so we want to leave our stops far enough out to weather a possible pullback. So I'm not going to have you pull into this next one at break even just to feel the nice fuzzy feeling of being positive lock price. I don't want you to do that. You want to understand that price is going to pull back at some point. So you want to have your stop loss close to the extreme to allow for that pullback if, in fact, you're wanting to hold for the entirety of this move. Many people will take at this first trap. All right, you've got the break of the Asia low. You're starting to see 1, 2, 3 down. You've got your third order in here. This is the time that I'd say 90% of the people watching this will want to learn to get out at that time. All right. Before engaging in the second type of add-in, we are best advised to take some profit on this initial impulse out of high a day on strong vector moves. You see a strong vector move come down. You can count 1, 2, vector 3. Take at least some off, if not all of it off, at this area. Right? Don't allow this stacked risk to sit there too long. Okay? Many of you will be just fine taking all off at this area of strong vector on the M1. All right, this is an M1 chart. Remember, we're imaging here. I'm drawing from the standpoint of an M1. Okay, so take that off, take that out. Most of you are going to be just fine taking your profit right down here. It's a quick move between this breakout and this take profit. Absolutely is. We're going to get into the minutia here in a second. Okay, the choice of to take it all off or to allow for the rest of the day to play out depends on if you wish to remain engaged with the pair for the possible hours of chop into the rest of the day. If it pulls back and chops for 2, 3 hours, are you going to be available to then possibly monitor it as it drops further down? Some are, some aren't. Some don't want to be involved that much. Some will just trade this segment of the market, and that's just fine. I've got an example of 10% that was available in euro yesterday trading this style. 10% trading like this, all right? With only 1% on at any given time. Amazing, right? It's absolutely true. You'll go look at it yourself in the charts. Remember, this structure, this number one type of add-in is a combination of a zone flip breakout or two and a either box or 13 EMA confirmation on the M1. It's these together, all right? That's your main idea here, okay? Let's do some math, and I'll show you why you may wish to try to grab only the first M15 push of the day. This might be the first push on the M15 chart. Might be number 2, might be number 1, but I want to encourage folks to start out with taking it all here, not getting into the pullbacks and the rest of that. That will take specialization and further development. You will have that. I'm going to give you the information to learn that, but let's just do some math on this initial move out of here. Okay, I'm going to put back the original stop losses so we can measure risk versus reward. Okay, I'm going to measure here. I'm going to copy paste this section. I'm going to bring it down once, twice, 3 times 4. Looks like about a little under halfway back, so it's about a 4.4. Okay, so you have 4.4 units of gain for 1 unit of risk. If you used 1% as your entry, which is what I would suggest, you can even go 0.5% if you like, but 1% will be our baseline. You have 4.4% gain on this move. That's typically what one will have on a single entry on the microcycle in London, taking the first big swing. You'll be in and out of this within about an hour and a half, 2 hours, sometimes just a touch more. You'll get anywhere between 3 and 5 to 1. 3 and 5, between 3 and 5% if you use 1%. All right, let's take this next position, bring it down. Looks like 2 and change. All right, we'll give that about a 2.1 units of reward to 1 unit of risk, and we'll take this next one, and this is where we get into the troubling area for probably most people, and I'll relate to it. Basically, the idea is that now you're getting into more of a unified 1 unit of risk for 1 unit of gain. Doesn't really do the work that these higher orders do. Okay, so you become, in a sense, getting into a riskier situation the deeper you make these add-ins. So this will be a point of discretion you will have to develop in your own trading. You have to know when it's better not to do this, just hold what you have on the top and take it off down here, or when to go in when you see a move might get sucked down. There might be something to the left here that gives you confidence this move will run. All right, so in this case, you get 1 and a little bit.
Variations
We'll call
of peak
it
formations.
1.2
What are they? What do they
of
look?
reward for 1 unit of risk. Add them together, and you get a yummy 7.7% trade if you only used 1% on each one. So that's 7.7 units of reward for 1 unit of risk. That's awesome. It's plenty, in other words. All right, so that was our first style of add-in. Let's talk about our second style of add-in. The second style of adding in, which many of you have already been engaged in without knowing it, is a clear microcycle pullback into a strong zone flip, into a trap area, a microcycle pullback into a key EMA, water, Mayo, a clear microcycle pullback into a 0, 0, or 50 trap through, or any combination of the above. So this is like a mini multi-time frame pre-confluence here. And in fact, it is what it is. It's better when you have more of these stacked up at the same time. Okay, so one of these you're all very familiar with, right? We know what one of these is when it's a pullback into the M15 water, right? So if you have a nice London anchor, price pulls down and it runs back up into the water, what trade is that? You all know what trade that is, right? Yes, it's the intraday 50-50 bounce. Carr's special intraday bounce. People have been trading this beautifully. Been watching a lot of success in this particular trade. It's fantastic. That is the type of confluence we're looking for to add in if we were to want to hold all of these trades and add in additionally, all right? So hopefully you're starting to see here that this type of add in happens after our primary shift in the M1 time frame, okay? So that is the pullback into the blue EMA, which is the water, which is the intraday 50-50 bounce, which many of you have already been doing. So the prospect clearly exists where one can put on orders at the top or bottom of the quarter, the top quarter of the daily range, top 1/4 of the daily range, take some off at the next strong trap area, and then hold these and then add in at that intraday 50-50 bounce to have even a more massive take at the end of the day. It involves a little more planning, a whole lot more experience, and certainly a lot more homework. So I'd say you want to evolve to that, but a lot of you are already trading these 50-50 bounces, so I'll leave it to you to use your discernment on this, all right? So if you see a 1 pullback, a 2, say for instance you have a 1 pullback, you've got your Asia midline above, you have 1, 2, and vector, right? 1, 2, vector into an M at that Asia midline, right? That might also have the 13 EMA involved. You have a nice confluence of events that will allow you to possibly add into this trade if indeed it has the clear London pattern anchoring it. All right, London pattern anchoring it is what this is all about. Right, use your 13 EMA. You can either do a pending entry here, not a bad idea to use Steve's pending entry concept here with 1, 2, 3 back, especially if this is in key timing. All right, we're going to go into Scott's trade, which had a beautiful opportunity exactly like this. This is what we're going to talk about in Scott's trade, right? This had everything we're talking about. It had the 3 back, it had the big M, had the zone flips on the way down. It's an exciting day for all of us, all right? Again, 11 months in the making here, guys. It's been 11 months rolling through this stuff. All right, so M113, EMA confirm, you take the entry short. All right, there it is. Stop loss. I would go more than your 1 spread type half. All right, I'd go a little higher because this is a fresh trap. Go a little higher, and then you have the big move on the way down. So perhaps you have all of these orders in the market, all right, all of those in the market with some taken off at this first cycle, at this first big move into a strong trap area to the left. Take off either a third or half. I prefer 1/3. If I'm going to engage, and I know I'm going to engage, instead of taking it all off here, I will take off only 1/3 to allow myself to have 2/3 of this order stack to play out for the entire move. Okay, then you have the add-in here, which many of you took today as your intraday 50-50 bounce. Add in the M1 chart so you get the little finer details, a tighter stop, and you'll have a really nice profitable situation develop there. All right, so you would take all of it off down here. This is the big picture that we're all working towards. I'd say most folks, you wouldn't want to go here right away. Okay, I'm going to give you an idea how I'd suggest you do this. And this is for those who aren't going to listen to me and are still going to try to revenge trade this and do this tonight and do it right away. Well, if you're going to do that and you're going to go live early on this, well, start with just the microcycle entries, which you simply hold. Start with the either confirmed or pending order that you simply hold for the entire move. All right, that's the first idea, okay? The first component is you're going to want to take some off at this area. Maybe you take off 1/3, maybe you take off half, allow it to come all the way back, and allow it to roll over, and then hold it for the rest of the move. That exercise is going to get you ready for adding in. If you can do that, you'll be able to add in. A lot of people can't wait that long. A lot of people click out of their trades. They just can't do it. If you can't hold this from here to here, you're not going to be able to do the rest of this, all right? So let's take it in stages. Start with the microcycle entries, which you simply hold. Okay, most of us have done that. All right, then additionally execute only the first zone flip breakouts. The safest one is the very first one you see. Execute only the first zone flip breakout, which appears near the fringe of these two. All right, it's going to be the fringe. That's always going to be the fringe. Don't do the third one. Start with just the first one. Get used to 2 orders in the market. All right? Then as you get proficient at that, you're going to have 2 positions on, maybe take all of it here, maybe take a third, maybe take a half, and then leave the rest to run into this area down here. You had no drawdown for the entire day, nothing to stress about. That's an easy starting point. Okay, if you're adding in 1 additional time, that's the safest of these zone flip breakouts, is the one that's closest to the fringe. If you can do that and you start to become successful, right, then bring in this third zone flip breakout, which is the tough one. A lot of times, this is the tough one. Okay, you're deeper into the move. It might pull back against you. You'll probably have to take some of it off pretty quickly, right? Again, it depends on the architecture of the chart. All charts look a bit different, so there's no one size fits all with this. But understand this is the more risky add-in as you get into this. Okay, learn to take it all off here, then take a third, then take a half. You might actually do it the other way around. Take it all off here, then take half off here, then take only a third off here. If you take only a third off here, it'll feel real strange when you get back in this area. You won't be as much profit as you're used to. So these mental issues you will have to walk through. You'll have to go through this on your own. All right, but this is workable. Okay, and then obviously get to the point where you can hold these 3 through the pullback and then take it all off down here. Okay, then lastly, once successful at that, bring in the add-in on this pullback in the microcycle into one of these key areas with all of these confluences stacking up. All right, and you'll be able to hold this in addition to these 3 all the way through. That's the ideal. All right, New York traders, can I do this? Can I do this zone flip breakout type of add-in in New York session? Absolutely, you can. I'm going to show you Scott's trade that he took obviously on the M1 chart, but now that he will know how to add in, he'll be able to contemplate this for the next, I would give it 3 months, maybe 4 months of really working this before you execute it. Trust me, you're going to want to think this out before you do that. All right, so New York traders who can't trade London can, yes, execute these zone flip breakouts on intraday 50-50 bounce trades and other trades. When clear M1 microcycles are present, that's the M1 cycle, we want to make sure we have the clear 1, 2, 3 up with vector into some type of anchor pattern. We want to have a really nice M1 microcycle up to warrant doing this type of maneuver coming down into price. All right, let's look at some charts. This is where it gets exciting. Okay, for all of you, I posted this chart in the Skype chat. We talked about this chart in the pre-market. I asked you, I'll set it right here, mark me up for DMR session later today. Refer to last week's Tuesday DMR session for info on multi-time frame markups. Okay, so hopefully you guys mark this up. I will actually show you a completed markup, and then we'll go through well, actually, I've made enough time here. Believe it or not, Mr. Time is far enough away that I can do this. All right, so London pattern type 3. Okay, it's a London pattern type 3. See it? Okay, that is an M. At the Asia midline, looks like our type 3 London pattern. Close below, close above, and then you want to use the M1 to execute in here. And that's where you have to exercise your chart vision over here to the left. Hopefully all of that becomes relatively apparent to you. Let's see if I can back through this. Now, I'll just go ahead and do it and bring down the, well, let's actually continue here. Okay, so that's the M15 chart. M15 chart, London pattern type 3. Good to go for adding in this rundown. Okay, remember news created that gap here. Okay, looking back at the H1 chart, what do we have on the H1 chart? We can see here a peak formation that in fact was a trap area. So I think I'm going to pull up the chart here. Okay, so there is what I'm seeing on the H1 chart. Okay, you can see a lot of motion and then a final vector move up into our zone flip. What does that look like on the daily? That's this zone flip right here. See the green candle, see the zone flip? That's a nice anchor point for the top of a cycle. Remember, when you see a nice peak formation, you're expecting 1, 2, maybe 3 days of drop. You have a nice D1 chart right there for a possible peak high. Here's your peak. Why is it a peak? I measure from the top of that to the close of the day. I have at least 50 pips. That gives me AFP short condition. I'll put a 1 here when it shifts against those higher level longs. Put a 2 at the bottom, and they chop back and forth in level 2. And then we have our trade, which happens right in here, which is our acceleration and extension move on the way into level 3. The best type 3 London patterns are on the way to level 3. So we had a really nice H1 chart there staring at you beautifully, and then let's take it to the M1 chart. Okay, this should have been your markup. Obviously, not including the M1 zone flip, that you had a 1 up, chop, 2 up, and then you had your move up into 3. This is your vector, your acceleration. You had your outside the band start to show itself, giving you the sense that this is the peak. Wasn't the best timing. You waited for them to roll off and then work their way back up into the key timing. So this would have been another part of your markup you would have wanted to have. All right, let's talk about this confirmation. You had a confirmation here for 1, 2, 3 minutes, a grand total of 3 minutes. But if you're watching the M1 chart with the higher time frame confluences, you're ready to take this trade. So when you mark this trade, keep in mind you're going to have the stop. I'm sorry, you're going to have the spread out in front of you. Okay, so let's look at the spread. It's abnormally low right now. Usually this late in the day it's wider, but 1 pip, give it about a pip and a half, 1.5 pips. Just look at it, get an idea of how big that spread is. And then when you place your entry on this chart, you know about where it's going to go, okay? Remember, you were ready to take this entry at the close below that line, okay, below the 13 EMA. You're ready to take the trade right in here, but you have to add the spread. So bring down your entry just the least bit. And if you remember from last week's session, we did our entries and our zone flips and all this on the MT4 platform, and then we imported it into Windows Paint. That's the best way to do this, okay? So we had a nice entry in this area. We had about a 13 pip stop loss. One could have as well taken the pending order. In this case, were you 1 pip from that high? Maybe not. Yep, might not have grabbed a pending order short at the extreme, but you were able to grab your confirmation below the line as it rolled over on this second leg. Okay, so here's your stop loss now. That was our first entry. Now you can see a zone flip below. All right, we've all spent time marking up zone flips ad nauseum. I hope you've done more than I have. All right, look at this. They break down, they pull back to the zone flip. They go a little above it, but it's still within the range. It's still the same idea. Stop loss above, outside the spread times 1.5. Your breakout below the spread times 0.5, so it's 1.5 times the spread, pretty easy. So 1.5 times 1.2, get out your little calcie and do your math. It's always going to be that, so why not do it here together? We'll call it 1.2 times 1.5, right? It's going to give you a 1.8, so I want you to have your stop loss at least 1.8 pips above this area, and I want your breakout to be 1.8 pips below this area. Okay, so it triggers nicely. Look at that, no drawdown. Really, really sweet. Now, this is not a viable zone flip. They never came back up to that area. Okay, you also had news. This was your 4:30 a.m. red news in London. That was why you had the breakout, okay, and why you had the gap. All right, so there really was no discernible additional zone flip. So this is a case where you really had two trades, okay? And this is like, it's just silly easy here. Here's your 1, okay? Here's your 2, pull back, chop, and then news came out. You had your 3. Remember, you would have taken your stop loss, and I would have blocked both positions in this case, so I wouldn't get taken out. Probably would have gone to about break even on this trade, okay, before the news came out, just to protect myself. A lot of times you see me post trades where I take some off in this area. Sometimes you can take a little bit out, so you at least get paid for the time you're there. But in this case, I would have locked my stop into this range. Actually, the safest place to lock the stop was actually above the zone flip, and you would have had to eat a 1% loss if it came that far up, right? But that was pretty far away. I would have locked this thing probably about right here. Okay, so this is a no trade. Not going to trade that. This trade moved down into our third move. Okay, so that's the initial move. It tapped ADR. At this point, you had your daily range pop. You can see how it didn't quite get to ADR. It didn't quite pop the average daily range, but it did bust through your trap through of the figure. All right, highest probability to take profit a lot of times is the other side of the figure, either a 50 or a 00. So a take profit sitting right at that 00 probably would have been the best bet. All right, and again, jump up into the higher time frames to go look back to the left. Right, you can see interestingly a zone flip right here. Okay, that was your first area, and then the next area that you're looking for, that was the first pullback. Okay, that was before the news. Then after the news, you started to see this stuff playing out. Okay, and the 00, they're always going to play on both sides of that 00. So the 00 was the best place to take right there. So right in this area, you don't want to sit through all this chop. You don't have to. Okay. So on this M1 chart, you had a really nice day. Now, if we want to calculate this, remember, we've done this before. We did this last week. I don't necessarily have to do it again, but I'm going to show you there is a bug inside of our lovely MT, actually rather Paint. that's going to show up for you guys. Okay, so save the chart. I'm going to name it HH. Just homework is the name of it. Okay, this is the same chart we talked about. Okay, so when you're copy pasting these units of reward to estimate the distance and the amount of compensation you'll have for this particular trade, I want you to take some linear line, draw a select box around it, hold the control key, and as you hold the control key, I want you to move this around and line it up so it looks pretty. Okay, and don't take your hand off of anything. Allow that box to stay. Do the same thing. Repress the control key and then bring it across. All right. The reason you do this is that you're loading in undo items inside of Paint, and that's going to help you with this wacky bug that shows up. I'll show you the bug. It's awful. All right. So do that before you copy paste these ranges. After saving it. Okay. So grab the range, high and low. Grab the stop loss. Grab the entry, and then slide it down. Keep it lit. All right. Take your hand off the control. Take your hand off the mouse. Press the control key. Press the mouse. Drag the next one down, and just continue doing it. You'll get a feel for it, and you'll be able to measure units of reward for units of risk, which in trading is everything. All right. So there we go. So let's count it. 1, 2, 3, 4, 5, 6. We'll call this 6.4. And now I'll show you where the bug comes up is when you come back and redo this. This last one, if you didn't do our little move here to fill the buffer with some type of useless endeavor, you would have a white hole there. We don't want that. We want to keep your momentum going forward. I don't want you to have to experience this bug inside Windows Paint and curse it out like I did before learning how to get around this bug. Okay, resave it. You've done your first unit of reward risk, save it. Okay, now you unfortunately got to return the same thing, but you'll get quick at it. Just copy paste some item. All right, do it again. It doesn't even matter if it doesn't look pretty. It's not going to concern you. Main thing is you don't want to unsave and have a white box here and have to redo all this stuff. So 1, 2, 3, and 3 and change. We will call it 3.3. All right, and then come up here and use the arrow. That will undo your move, and it'll be nice and tidy. It won't be all messed up with that bug that happens inside Windows Paint. And we'll go 3.3, all right, and just to make sure you're absolutely precise, whip out your calculator, even though many of us don't have to do this, but there it is, 9.7% gain on this trade if you only had 1% risk. Starting at the top, run your stop loss to break even, get down below, hit this again, stop loss to break even, maybe above break even a little bit, hold through the news, grab it at the next trap, bam, beautiful. 10% today, guys, on GU, only taking the first swing. Hello. All right, obviously preaching to the choir. All right, let's go into Scott's lovely GA trade here. Okay, actually, I'm going to go through EU. EU has the prettiest zone flips. Let's do that one first. Okay, that will require me here to jump back into EU, and we'll look at the same principle on EU, and you'll have a few no drawdown opportunities on EU. I'm not going to test you on this. I'm not going to say mark up this chart. I'm just going to show you a chart that's already marked up. It's the easiest way to learn a concept, and we'll go top down. Why did we want to take this trade? Well, you had a lot of momentum through the election to the downside. Your trend was strong to the downside. At the point of this trade actually happened. I'll show you where this trade happened. It was also a type 3 London pattern that happened in here. So within this area, from this point to this point, possible pullback and then down into this D1 zone flip, you had an opportunity for a type 3 London pattern. Okay, so ignore this. At this point of the chart, we were on our way into level 3. We were actually on our way down into this trap area. If you've worked with me long enough with these trap areas, a lot of times price is sucked back into them. So we had a good idea that we're going to suck down into that trap area. Right, so the 15-minute was right here. It was a tight type 3 London pattern, but it was a London pattern type 3 nonetheless with a nice confirm. If all you did was take a confirmed entry here with a stop above, you had a nice day. Okay, but let's look at this M1 chart and dissect it accordingly. And we'll show you that this was a 10% move as well with 1% risk. Okay, going back farther to the left, which is where I'd suggest you start your markups, is if you have a type 3 London pattern, there's going to be some anchor point inside the Asia range. I want you to take that into consideration. Asia range, 1, 2, chop, and then up into 3. That becomes the first leg, comes back down. And then into this little tiny M, you had a 1, 2 vector. Remember this part inside here is the vector up into the Asia midline. Did not take it out, but notice the trap through the 0, 0. Okay, pulls back down, then runs up and creates our second leg. Your first entry was obviously a pending order. This would have worked out beautifully. I would hope someone in our group took this. You could have had a pending order 1 pip inside of that first leg. Everything was working in line with a type 3 London pattern. Could have had your 5 pip stop, easy peasy. If you missed that, you could have grabbed a entry as this candle closed below the 13 EMA. Remember to calculate the spread. So when you put in your symbol for the entry order in your multi-time frame markups, I do want you to put that out ahead of the spread a little bit. Same with the stop loss. Put your stop loss above, in this case, above the high of this leg, could have been a high of this move. Safer was on the other side of the Asia midline plus the spread. All right, price comes down. You have a really nice zone flip back here to the left. You've got a couple minutes to think about it. Get your stop loss set. Get your breakout order set. There she is. Clear as a bell, no drawdown, wham, comes right through that. Let the market come to you. Remember that Napoleon Hill thing? Don't add in unless it's worth it. Want to see performance before you add into something, okay? And then it does its chop here, and there's actually a zone flip inside here that you can see if you open the chart up. And this is where it's going to take some time and finesse for you guys, right? But always the low side of the Asia range is some type of low spike, okay? So you do, in fact, have a zone flip in this area, and it's a very nice one because it's so tiny. And the tinier ones will allow you to have tighter stops. Obviously, this is a relatively tight stop. Sometimes the third entry in zone flip breakouts is wide. Sometimes you don't want to take it because it's so wide. But this is nice because you're coming down at least to the quarter point and then possibly through that quarter point. And again, if you're focused on the daily chart, you were thinking about this D1 trap area below that you were assuming you're going to hit. They pulled back before they got to it, though, right? So any trap through of the 0-0, this is where we are in this chart. Any trap through of the 0-0 is always a nice place to start thinking about exiting, and look at how they did it. They did a 1, they did a 2, and then vector acceleration 3. So you actually had your 3 inside of the very tail end of the London box share. So you had to be ready in Frankfurt to take this trade, okay? Always be ready in Frankfurt. I'm looking for these in Frankfurt. I'm looking for these in London. Sometimes an hour after London. This 3-hour window inside here is solid gold. All right, so you had another entry, obviously, zone flip breakout. Look at it, okay? Stop above. Cleaned right through that, no problem. Did the slight pullback. On the way you go. This is, it calcs out to 10% plus, all right? And then, of course, let's zoom this chart out. This looks rather familiar to you, doesn't it? Right, this is yesterday, right? This is basically what I drew for you in designating the completion of the initial impulse move out of the London pattern, then the hours of chop into the pullback into the intraday 50-50 bounce, which is exactly what this was. With zone flips inside there. Each one of these could have had possible add-ins. Okay, well, let's finish her off with Scott's trade. We'll reopen Scott's trade. I'll show you Scott's trade on the 15-minute at first. All right, beautiful. Asia range 50 bounce off the nail. Remember, an AR50 has to clear the Asia range to pick up the pendings, and it's literally the stop hunt back into the Asia midline. They don't take that out. They hold the area. They roll over. It's a trade, right? So he had 45 minutes in this where he could have been more productive. We'll show him how. All right, and what I'm going to do is we'll do top down on this again, okay? Look at the big zone flip that's happening on the D1 right here. That was a couple days ago. It came up into the area, rolled over. Always a nice beginning of a cycle when you have a zone flip that anchored it. H1 chart, what did you have? You had the vector move up into the peak. Why did we know this was a peak? Close of day, greater than 50 pips. This is level 1. This is level 2. All right, our trade was right across this Asia midline in here. It's right in here. Okay, so it's this move right here, that pin. Okay, so you're on your way to level 3. Beautiful. Asia midline trade on the way to level 3. This is what your 15-minute looked like. It did its deal there and then came back and gave us this nice move against the Mayo. Once you open up the M1 chart, it gets absolutely beautiful. Okay, again, I'm not going to test you here to market. I'm just going to show you guys. All right, I don't want to test you, but I will start to get you interested in this. All right, so here was the bottom of the move. You had your first move up. You had your 2, which is oftentimes a squiggly type of higher highs, lower lows. That's very typical. Then you had your vector. Finally, vector. Trap through the 000, trap through the Mayo, comes back down, and then gives you the second leg in here. No pending extreme order, but what you had is you had a nice entry on the close below the 13 EMA. Remember, bring in the spread plus a little to understand that you're not going to get filled. Remember, if you take an entry at this point, it fills you 3 pips into price. All right, so take that in consideration, stop loss above this area. All right, then you had a mini zone flip inside here. I want you guys to start seeing these more detailed ones. It will take some time. It will take some time. You had this, see this pullback in here? They pulled back up, they went down, and they pulled back into it. Get used to the look of this. because it gave you a no drawdown zone flip breakout with a stop loss on the other side of the male, perhaps on the other side of the Asia midline, right? And sure enough, straight down, straight down, straight down. Then they gave you this very nice zone flip. The best zone flip breakouts that exist are the ones that straddle some type of key area, if that's an EMA, if it's a 50 or a 0-0. Okay, it might be a trap to the left. This is really nice. It was a clear as day zone flip with an M here. In some cases, you'll take the entry in this point. All right, especially since it dealt with the catch-up. All right, we'll get into that nuance further down the road. I don't want to get into that at this point. Safe to say you could have taken a zone flip breakout here. The breakout was so big, you might have passed on this. I would not probably do this, all right? So I'd avoid this. The only trade that was possible was a possible add in here on this M, but let's just stay true to our word here and say, okay, you had two nice zone flip. You had one nice zone flip add in here, okay? So whatever you got on this, Scott, multiply it times 2, okay? So that's 100 down. This is probably another 90 down. So you're able to pull 90 out of this. That zone flip breakout was also nice. I like it because you can see it busted below the 0-0, okay? So adding in is going to be something that I want you to spend your time considering, all right? It is a trade concept that will obviously have to be sussed out by you and you alone, all right? But we'll work on it through the coming days. I want to wish you all a great rest of the trading day, and we'll see you at 7 a.m. Eastern Standard Time for our New York pre-market session. Take care, everybody. Bye now.